Hello everyone. So this is TNT Sunrise in Trading View. All right, this is my first webinar after Chinese New Year, and let's look at the international markets. All right. For the audience, all right. If you don't want other people to see your face, you can turn off your camera. Right. You can consider turn off your camera. Okay. Okay, first of all, let's look at the dollar index. Okay, the dollar index is a basket of some other currencies, major currencies, and the dollar index is very important. Okay, in the forex and the future markets. Okay, because a lot of pairs are denominated in the USD, and a lot of commodities like gold, oil, right, natural gas are all based in USD. So whether the dollar is going strong or going weak will affect the markets a lot. Okay, so let's take a look of the DXY from the weekly chart, as I mentioned in my last webinar. Okay, and I have emphasized this very long time ago. Okay, this 88.71 to 89.62, this level is so important for the DXY because it is a weekly neckline. Do you agree? Do you agree? This is a very strong neckline. What we call a neckline. Neckline means it is a connection between the bottoms or the tops. Okay, neckline. Yeah, you're always encouraged to interact with me through messaging. Okay, you can message me here. Guys, can you see my screen? You guys, do you recognize these are the important neckline? If yes, reply by 1. Okay, so neckline means, okay, it's a connection, okay, with the tops or the bottoms. Okay, this is more tips. Okay, so what make a top? A top looks like this. Okay, multiple tops. Right, this is a traditional double top. Okay, a triple top. Okay, triple top. Right, or a head and shoulder. Left shoulder, head, right shoulder. Okay, so the connection point, this will make the neckline. Understand? We call this tops. Okay, the connection between the 2 top or the 3 top or the head and shoulder are the neckline. Okay, so neckline means once the neckline was broken or was invalid, okay, violated, which tells you a big trend will start like this. Okay, so this is clearly a very good neckline for the dollar index from year 2006 to the year 2014. Okay, 2014. All right, so what does this tell you? Is this tell you that the DXY has already broken the range from 89 to 70. It has moved away from this range and ready to go for the next range. If we are using the 1-to-1 measure ratio, we can see that DXY is easily to go to up to 108. Okay, this is what we call the equal range, all right, or parallel range. So let me highlight this, okay? So this range is telling you that the DXY has moved up from the bottom box to another box on top, okay? It may go to 108.88, right? And now the price has already comes back to the neckline. So what does this tell you? What does this tell you, guys? Do you think it is a good time to buy the dollar, or you think the dollar will still going down? Need to check price action. Okay, good point. All right. But generally, this is a very, very common rule is, okay, structure, breakout, retest, found support, normally the price will go up. Okay, that is in a weekly basis. So that's why we need to check, yes, the price action of the DXY from 88.71 to 89.56, see whether the price is being supported, right? If the price is supported well, which tells you that yes, a lot of buyers are coming in to buy the dip, okay, to buy the cheap things, okay? However, a lot of novice traders are still selling, okay, because novice trader always see what has happened and trade. Okay, the main issue is novice trader or new trader is novice trader like to chase the price, like to trade after a very, very big movement. Think about this, right? When the DXY is going up to 104 or 103, at that time, okay, people or the general people, ordinary people will see, wow, this is a tremendous move, okay, tremendous move. I should have bought from here, 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 or here, right? If I bought from here, I already make a lot of money, okay? Since the price is still going up, okay, so, right, it's never too late to buy, okay, then he buy it here. And after he buy, he found, okay, oh my God, the price reversed, okay? And then when price drop to here, these people, okay, will have another kind of a thought. Looks like some people says the DXY is in a strong trend is bullshit, right? The trend has already finished. And now the downtrend starts. Okay, yes, we did see a downtrend, right? Very strong downtrend. And then the people start to selling here because he saw this fall. He saw this retracement. He saw this decline. Okay, but smart trader, okay, or professional trader, we are doing this the other way. Okay, we want to buy the low, sell the high. Okay, which means we don't chase the price. The price drops, keep dropping until it hits into a very, very strong neckline of this double bottoms. Okay, pro traders start to think, why is this good place for me to catch a very good buy rather than I want to sell, keep selling. Okay, that's the main issue. Maybe 2618, maybe, but we need to know that the neckline, if the neckline is very, very good, okay, the price doesn't necessarily to touch the 618 every time. Okay, there are a lot of time the price didn't retrace 618. For example, here, okay, the price moves from here to here, right? And if you are keep waiting for 618 only, right, we won't get the entry. So the very important idea is you need to look left to find where is the stronger support. Okay, so let's check the price action, guys. What does this price action tell you? From weekly chart, you can see that the strong move down candle, okay, this from the inside bar breaks out, okay, retest, second time trying to make lower low but failed. And then there's another inside bar comes in here, all right? So very, very interesting phenomenon, okay? Do you see this as an inside bar? On February 12th, okay, a very strong candle. The last week is a small candle which is contained totally inside the previous one. And this week is another candle, the third candle, right? So, Sheriff, let me ask you, what will you trade or what will you have a look if the price goes up or goes down, if you see that happens, what does this tell you? If the price can goes up to 90.25, okay, hit maybe 90.26 or 28, okay, can break up this highest level of this inside bar, what can we do? Buy up, yes. Inside bar strategy tells you that when you see the price breaks a high, okay, you can trade and put your stop loss the other side and aim for at least 1-to-1 or 1-to-2 ratio. Okay, so in a very, very strong supporting area, and we do find a good price action. First of all, this 1, 2, 3, 4, 5, 6 candles cannot break down, cannot make a lower low, right? So that's the point number one, okay? 6 weeks candle, no more lower low. What does this tell you? It tells you the bearish trend may ending, right? It's ending because bearish trend will have to create a lower low. But after 6 weeks has passed, there's no lower low created. Second, okay, price action, okay, formed a inside bar. Inside bar, okay? And if the inside bar tells you that the price is ranging, okay, it's ranging, no directions. But if this inside bar will go up, then it actually tells you there's direction comes already. Okay, so guys, we have to watch this 90.25 area. If the DXY can break up this level, it will definitely go up to 91.73 at least. Okay. So here, from this price action, from this structural analysis, we can see that DXY is really in a very, very good position to buy. Okay, that's the conclusion. That's the conclusion. Okay, let's look at the euro. Okay, so the conclusion is DXY, okay, is our strategy. Okay, is to buy. So what does this tell you? If DXY is going up, what do you think about the other currencies or the other future products? How about gold? How about gold? Gold, you want to sell, right? That's the instantaneous thought, okay? How about euro? Sell. How about other major currencies? Sell, okay? Because DXY is going up. And gold sell, euro sell, and major pairs sell. Sorry, not Paris, pairs. Okay? Do you understand? Yeah. Okay, I have to quickly check your response. Okay, so just have this kind of logic. If DXY is really in a very, very good situation to buy, then what happened to the other pairs or other products is they are likely to fall, at least for the currencies and for the futures. All right, so let's look at the other products. Okay, let's look at euro dollar. Euro USD, okay, in daily chart, you can see here, this is a very, very strong sell. Okay, price rallied almost already break the high 1.2540, but then it formed a bearish engulfing candle here. Look at it here. This is the highest point, right? By right, if the uptrend continues, after it breaks up, it should actually pull back and stand and goes up again. You shouldn't actually form this kind of an engulfing candle. But this engulfing candle happening in a very, very good place and tells you that the euro is likely to fall. All right? So euro already starts falling. How about sterling? Sterling, yes, a lot of lower highs. Okay, just as yesterday I already published, we can short sterling, right? If you short by then you can actually earn about maybe 60 pips or 50 pips. I think this is a very good scenario for the sterling to take a short, because first of all, if it hits price already been rejected from the upper edge of this triangle. Secondly, if the price breaks the downside retest, you should find place to short. Let's look at oil. Did oil fall? Yes, oil already starts falling. Okay, very strong fall from 66 to 58. How about other things like TV dollar, Aussie dollar, AUD, USD? Yes, falls already. So all the pairs start falling when DXY is making a bottom. So does this make sense to you? Yes, you're right, David. Gold in a triangle in daily. You're right. But until now, I'm talking about this correlation between DXY and all the other products. Okay, so there's a very, very good function in the trading view. You can using this compare. Okay, we can compare a lot of things. Okay, so let me just show to you DXY. Okay, DXY. We compare with euro dollar. Okay, we compare with Aussie, compare with gold, compare with oil. All right, a lot of things. And let's just see it in daily charts. Okay. I think I need to use not percentage. Okay, use the log scale. Better maybe. Use percentage. Okay. All right. Okay. So what can you see? We can see from the chart, okay, that when DXY going down, all the other currencies or other products are doing what? What are they performing? Can you see it? This is what we call negative correlation. Yes, inverse correlation. You're right. Okay, so if the DXY is going up, okay, and we are using the same structural analysis. If the DXY rise to here, I think for the other pairs, you can find the same timeline here. Okay, these are the places that for the other currencies to drop. And you can see here that the oil has already fall below this target. So oil has already, did the correction. But for the Aussie and for the gold and for the euro, not likely. Okay, so there are still room for the other pairs to fall. Okay, just remember this. All right, so with the strategy of DXY confirmed, okay, we are likely to, to see other pairs strategies. Okay, so for euro dollar, if you don't have this short from this engulfing candle, okay, let's go for 4-hour chart. Wow, this 4-hour chart. Okay, let's take a revision of these candlesticks. Guys, do you remember in last year I have taught you guys a strategy called inside the bar, right? Do you remember? If you don't remember, you can go to my YouTube channel. Okay, and you find this inside bar tutorial, okay, which is I think somewhere in June, right? Where is it? Yes, here it is. Okay, inside bar and pro gaps 217 October 9th. Okay, this video, let me find the links for you guys. Okay, there's some other candle. Okay, it's very okay. This is a video. This is a tutorial video I made last year, and teach you guys how to trade inside bar. Okay, if you are interested, just click this, and you can learn it by yourself after this webinar. Okay, so for those people who already know what is inside bar, okay, what is this, guys? Can tell me what is this? Which one is inside bar? Just now in the daily chart, we found a engulfing candle, right? And in 4-hour chart, we find an inside bar before the engulfing candle. Is that cool? Is that cool? Because from the idea of engulfing candle, you should trade after the engulfing candle was happened, right? You should trade short from here. But what we do is we go to smaller time frame, okay, because we know that this 1.2540 is a very important level. Okay, we need to see the price action, and we do see a price action here. This one, the first one, is a mother bar, right? This is a mother bar. How about the second one? This one? Is this one totally inside the first candle, guys? Do you agree? Totally inside. You can just mark the high and mark the low, and you can see from your eyes, right? Yes, it is. Okay, so this second one is okay, inside bar. And the definition of how to trade the inside bar is, okay, you need to watch the bottom and the top of this inside bar, okay, right? And you just watch which direction you take. If the euro goes up by breaking 1.25484, what do you do? If the next candle breaks up the highs of the inside bar, yes, you should buy. Okay, put your stop loss below the inside bar's low. If the price break down the lowest point, you should sell and put your stop loss above the highest point of the inside bar. Okay, and boom. So did you take the trade? Didn't you? Shall we take the trade or not? The inside bar already break down. So at the point you should, okay, there's only one so-called not so convenient part of the inside bar, okay? One I so-called the side effects, okay? Side effects of inside bar, okay? Which is you have to watch the breakout on time. You have to watch it always, okay? You must prepare. You must be watching the market. If you missed, if you don't see the market, if you are doing other things, you will miss the entry, okay? Because inside bar, suppose you should trade at the time when it breaks, okay? However, if you think you may, if you're afraid that you may miss the entry, here's a strategy I can tell you, okay? Here's a strategy I can show you. You can use this as an example, or take this as an example, okay? Okay, we see an inside bar, and we see the highest point and the lowest point, okay? And you need to take the high and take the low, okay? If you're not at your desk, if you're away from a computer, right? Here, okay, you can put a buy stop order, okay? Few pips above the high. Buy stop order, okay? And here you can put a sell stop order. Sell stop order, few pips below the low. So this is the only way to prevent that you miss the trade. But another thing, another scenario comes is the inside bar's momentum normally will give you a 1-to-1 risk reward ratio. For example, the candle here, it really goes down, okay, and breaks the low. If you take the trade, you should measure the risk, which is here, okay, which is here. Your risk is this much, right? Okay, so you need to draw a 1-to-1 risk reward ratio here. Okay, make it 1-to-1. Okay, 1-to-1 is about here. When the price goes in your favor to 1-to-1, okay, you should do what? What's a good action plan for you at the time? If the price successfully hit the 1-to-1 risk and reward ratio, what should you do? No, not TP. Is to take half, okay? So 1-to-1, okay? Take half position, the rest, okay? Stop loss to break even, BE, okay? 1-to-2, what can you do? If the price goes to 1-to-2, yeah, you can take all of them. Okay, you can take all profits, or you can close another half. So which is quartered. Okay, halves of the half. Okay, because this is in static. This is actually purely math. Okay, it's a math. Imagine you have a sell order here. Okay, it goes to this place. You take half position. Okay, say for example you win by 50 pips. Okay, you earn 50 pips, and if your stop loss move to break even, at least you have half position get to 50 pips. Okay, and you are in a risk-free trade. If the price continue goes down, you can enjoy another 50 pips, right? And total is 100 pips with the second position. Okay, it doubles your profit. Okay, and by doing the take half profit, you actually are reducing your risk, because definitely you don't want to sell an inside bar or buy an inside bar. If the price goes to here, you never take any profit, and then boom, the price just moves up and take your stop loss. Okay, so we have to prevent this scenario to happen. Is if you are having a winning trade and you already catch a 1-to-1 risk reward ratio, don't miss it. Just take half of the money and move the stop loss to break even. Okay, make sure you don't have any chances to lose money. Okay, that will be a sure win scenario. Okay, so this is very, very important rules for inside bar trading. All right? I hope you can understand. Yes. Not only the top or the low, okay? Inside bar can appear at any place, okay? But the important part is you should know the inside bar's structure, okay? You have to combine with the structure with the high or with the low, okay? There are two scenarios I need you guys to know, okay? If the price goes to the high, imagine this is a very strong resistance level. Imagine this is a very strong support level, okay? So at this top, okay, if the price didn't breaks up and form an inside bar, you should be prepared to trade the sell, okay? Understand? Let me highlight this, okay? So the direction of the inside bar, sometimes you need to choose whether you want to trade the breakdown or trade the breaks up. Okay, so this one you need to sell. But if the inside bar occurs at here, this one, what you should do? Which is better strategy? To trade the breakdown or trade the breaks up? Yes, up, because there are plenty rooms upside. My question is, how about in the middle? If the price goes up, sideways a little bit, right? Boom, breaks up from the mother bar, and then followed by a inside bar. In this scenario, what you should do? You should trade the up or down. Yes, still up. Okay, still up. Because if the inside bar occurs not at the high, neither at the low, okay, it occurred in the middle, you should follow the trend. Previous this uptrend, if the trend is up, in the uptrend and inside bar comes, you take the breaks up, okay? So if the inside bar occurs in the middle, okay, the plan is follow the trend. If the inside bar occurs at the high or at the low, you should finding reversal, okay, reversal here. All right, so this is the whole thing about inside bar. Okay, I think I have make it very, very clear for all of you guys. Okay, that you really should take a very, very good review of this good strategy and to take a lot of examples. Okay, repeat the market in the past, find a lot of inside bar which is successful and non-successful, and you find out the rules for yourself. All right. Okay. Okay. So move on to the market. The euro dollar right now, it is in a kind of a consolidation. You can see that this is a consolidation, right? Yes, it is. Okay. The price may goes up or goes down in either directions. Okay, but since 1.2550, this is a very, very big reversal, and the price has already goes down. I would like to find a plan to short the euro for a trend continuation trade. Okay, I don't want to buy from here or here. I don't want to buy because I know if I buy, the room is only this much. But if I sell, the room is unlimited. Okay. Of course, you want to, since we are going to sell, where should I sell? Okay, then you apply the Fibonacci level from here. You can see that the best selling point is 1.2442, this 618 level. So be prepared, the euro may have a bounce, right? Be prepared. And you want to short from that level. Okay, are we clear? So euro, sell the high, okay? Wait the price to either goes up to 1.2442 and sell, or you wait for the price to totally breaks down this level, this structure breaks down. After the breaks down, you sell the pullback, okay? So in either way, you can take the trade. All right? Are we good? Okay? Okay, let's go to sterling. Sterling dollar, all right? Take a look at this triangle here. There will be some bounce, all right? So if the bounce goes up again, you can sell again or trade the breakout downside, okay? So sterling, I think not much to say, but find the time to short, right? Don't buy. Unless there's only one scenario for you to buy is you see this happens, okay? There's only one scenario for you to buy sterling, right? Is when the price comes to here and moves up and breaks the trend line here. And then you buy from the retest. Okay, here's another thing, right? Clear? So right now it is still in the triangle. You can actually watch, just observe it first, okay? Observe first. Cool? Okay, good. Okay, Aussie dollar, same thing. Price are consolidating from 0.7990 to 0.7800. Okay, so this range is important. Okay, I'm going to sell the Aussie also using the 618, which is 0.7991, but I don't know whether the price will goes up that much. But if the price did goes up here, I will definitely take a short. I will short from here. Okay, or I will wait for the breakdown and the retest, pull back and short. Okay, Kiwi dollar, Kiwi short. Okay, Kiwi short because this place is very, very strong. Okay, and for Kiwi dollar has already make a reversal sign. Okay, and then starts a bearish trend. Okay, you can see here the highs is getting lower, the low is getting lower, right? The low is getting lower, so you may just follow the channel and continue to move down. Okay, and I believe the Kiwi dollar may touch here 0.7190. If this place is taken down, it will have more room to fall all the way. Okay, dollar yen. Okay, dollar yen is ranging, but 106 is definitely a good time to buy because the dollar yen has already completed the 618 pullback here. Okay, a 618 pullback, a strong red candle from an inside bar. So this week is also very important. If the inside bar breaks up, you know what happens, right? So I can say that dollar yen don't short. Okay, we already achieved our shorting target. Okay, if you see my analysis in TradingView here, okay, I'm telling you guys to short from 111.47, right? I said short till 106.37, and it goes, okay, easily, 700 pips. All right, and time to buy it here now. Okay, time to buy. Okay, for a long-term view. Okay, long-term dollar yen will goes up because the dollar is increasing the interest rate. Will pushes the interest difference between the dollar and the yen. Okay, which means if you're holding Japanese assets such as bonds or equities, right, you are losing in the currency interest. Okay, however, if you use the same amount and invest in the USD bond or USD or equities, right, the interest yield is higher than the yen's. Okay, that will actually drive the money from yen to from the Japan to the dollar, because the money always goes into the higher yield, right? If the assets are considered an equivalent safe, okay, that is what we call this interest driven or carry trade, okay. Aussie possible bet, okay, let me see. In weekly chart, I didn't see a bet. In daily chart, well, where is the bet? Are you talking about this one? Are you talking about this one? I think you're talking about this one, right? No, smaller one. Okay, smaller one. Here, for our chart. No. Oh, you want to sell another bet, right? This one, a bearish bet. Are you talking about this bearish bet? Like this? Yeah. Yeah, this is okay. Yeah, it's good. It's good. This one is definitely good, okay? Which tells you that the whole area of this is very good for you to take a short, okay? If the price comes to the level, okay? Sell high. Yeah, but you don't always wait for the entry, because you need to look at the structure, okay? Because sometimes the pattern, harmonic patterns may not complete. Okay, if it's never complete and you just miss the other opportunities, that is not acceptable. Okay, so just be using the tools that I have taught you guys: the structure, the Fibonacci extension, Fibonacci retracement, harmonic patterns. Right, a lot of things. You just combine all of them to find your good trading plans. Right, that's the most important part. All right. Okay. Right, so dollar Canadian. The dollar Canadian is really, really very good buy from 1.2 to 55, right? If you look at here of last time, what I say here, right, it is very nice trade, okay? The price just being supported from 1.2244 to 1.2388, right? And now it's 1.27229. Right? This is a very, very good trade because we are catching the potential low. Right? And the price didn't actually, take our stop loss. Okay, and it's going to hit the target one. Right? Oops. So this one, yeah, is already in money for 300 pips, right? Anyone take the dollar CAD long trade? Anyone? Have you bought dollar Canadian from the 618 level or from the I tell you guys, there's a very good harmonic patterns here. You can see here, do you see here? A very, very good harmonic patterns occurred at the range that we are seeing to buy, okay? So that is the greatest part of harmonic patterns. You are always okay to buy a low. All right. Think about this. If you have trade from this D point 1.2 to 60 and hold to here, wow, that is almost 500 pips. Is this powerful? David, can you recognize this bat pattern here? Yeah, so this is a very good example, right? a good harmonic pattern, smaller time frame occurs in a higher time frame supporting structure, you find a good pattern to buy. All right, so dollar Canadian, nothing more to say. All right, I think the price will goes up to 1.29 and then go to 1.34. Okay, 34. All right, downtrend channel breaks up sideways to 618. Another rally will comes. Okay. All right, let's look at the S&P 500. The U.S. stock equity is crazy in the last few years, right? And then a very deep correction happens, makes a lot of people bankrupt, right? Right? A lot of people's stocks have to cut loss at the very low. Okay, again, this is another story of don't chase the price. If you chase a price at the high, okay, you are being trapped. Okay, the bulls are trapped. If you sell the price at the very low, the bears are trapped, right? So this is a trap, okay, for bull trap and a bear trap. What shall we do is, okay, we wait for the price actions, okay? How many of you find out these two are this level, okay? This 2507 level are important structure because price has already breaks up here, right? Breaks the high, okay? Retest once, twice, three, okay? And then comes down, or a super lumping bar here. In a forward chart, you can see more clear. Do we have a bad pattern here? Guys, this harmonic pattern just tells you that you should buy when S&P falls second. This is the first time fall. This is two try. If the bears tried twice, but it cannot break low and form a harmonic pattern, you should buy, okay? Simple? Do you find the logic? Yes, you're right. Another bet for bearish. You are right. But I want you guys to emphasize in this, okay? First try, very strong sell off. Second try cannot break a lower low and forms a bullish harmonic pattern. You should buy. Definitely should buy. Don't be scared. Wow, the market is crazy. It may goes to what, blah, blah. Don't listen to the stuff, okay? Just trade what you see, okay? This is a very good example of trade what you see, all right? Because you know what you are doing. If you're buying from 2560, your stop loss is 2520, you're risking for 40 pips, all right? 40 points, and you're getting 5 times of your reward. Why not? Why not take the trade? Right? Don't be scared, all right? Look at the risk-reward ratio. Look at the good entry point you get, right? Compared to the guys compared to those guys that they bought from 2875, you bought from 2573. You are much better than them. Of course, you can make money, but not them, right? Okay. And look at the bearish one. The bearish one is here. Right? It actually tells you that S&P is better to short from 2837. Right? You just wait patiently at this place and look left. There's structure here. So when the price comes to 280.02, you should already can establish your trade, right? Sell the S&P from this zone, right? Okay, combine the structure and the harmonic patterns together. All right, cool. and you are selling high, not selling low. You are buying low and selling high. All right, lastly, Bitcoin. Okay, Bitcoin, okay, I can say that the Bitcoin has did a very, very good ABCD patterns, right? From last time I published in my view in Trading View, okay? So BTC USD, where's yep, it's here. In January 1st, I said BTC USD is going to fall to 8,000, and no people, I mean, there are a lot of people questioning, wow, this thing is just tremendous, we should buy. And I say, if you want to buy, you don't want to buy the high, you want to buy at a 20,000 level, you want to buy at 8,000 level, okay? And this ABCD just, happened nicely, right? The price just go all the way from 17,000 to 8,000, right? If you take short, it makes a lot of money, and then price reverse nicely from 8,000 level, right? So this is a very good example of how ABCD patterns, how harmonic patterns can help us, all right? Here, for the BTC, we can see that the long-term trend line is still working, okay? Still not breaking this high, so what should we do is we should watch closely of this 11,000, 20,000, or 12,000 level. If the price cannot break this high, it will go down again, right? If the channel, because the first channel is already break down, okay? It tells you the BTC may have another fall, okay? So watch closely of this pricing level, right? If the price reject from 11,000 and fall, you should sell. Okay. All right. I think there's almost 1 hour, and we covered a lot of things. I think we do have a lot of good opportunities, right, for this week and then the next. All right. So enjoy all the trade ideas I shared, all the strategies I shared. All right. If you would like to learn all the full strategies, the full course from what I teach, okay, you can go to my website here. Okay, go to harmonicasia.com, go to the Pro Trader course, right? If you have these kind of problems, right? Market is against you, you don't understand the market, you don't have a plan, you don't have a good entry point, you don't have a good closing point, right? You always can only making a little bit, few money, but lose a lot of money. Trading is difficult, right? And here you go. You have this very, very nice, organized, and easy to understand from step 1 to step 100. How you make a perfect trade, how you set a good trading plans, okay? And this is for all the people who want to make trading as your living, okay? Tools. Okay, to develop your own trading plan and enjoy the profit of the market. Lose small, win big, lose small, win big. Always doing that. Okay, and lastly, my YouTube channel is in ProJack. Okay, just search for ProJack for YouTube, and I will upload today's webinar to the YouTube. Okay, so just wait patiently. Wait patiently of my upload. It will be appeared here. All right, so see you guys next week. All right, I think next week I'm going back to China again. Still a lot of work to do, so I may try my best to make a webinar again when I was back in Shanghai. Okay, maybe next Tuesday. Yeah, maybe. So all right, plan your trade and trade your plan. Okay. Yes, I'm taking a profit of my Kiwi short. You can see here. This is my profit from last week. No, sorry, today. Today I have made already 1,000 US dollar. Right, just for today. Right. If you're going back to last week, okay, last week I made $7,000. Right. Okay, some from Euro yen, some majority are from Kiwi. Okay, this you can see how I trade Kiwi. Okay, yeah, just now I took a profit because I'm shorting Kiwi. Can you see here my position here? Okay, and now just now there's a 4-hour inside bar breaking out here, right? Do you see this inside bar? So I short again. Okay, now I think the price have some bounce, right? This is a bounce, so I take some profit and let the rest go, right? Easy money, yeah, really easy money. Yeah, and I have made a record from January to February. These 2 months. Let me show you what is rate of the rate of investment. Okay, I have published in my record here. Okay. This is from February 1st. Okay, from February 1st to February 7. Okay, 7 days. Okay, 7 days. By just taking the euro dollar short. Okay, my equity grew from 2,000 to 20,000. Right. Okay. And why should I short euro? Because euro is here. This is the trade I make. The starting point is actually from the non-farm payroll days here. It's here. Okay. Oh, sorry, it's this one. The non-farm payroll makes the euro breaks down this 1.2480. Pulls back, I take a short. Okay. Pulls back, I take a short. That is my first position. And then on Monday, it actually comes to here, have winning profit, pulls back, I short again, pulls back, short again, pulls back, short again. You can see a lot of pulling back structure here. Okay, so every time when there is a pulls back, I take a short, and I took profit of my adding positions. Okay, and add it back when it pulls back, take a short, take profit, pulls back again, short it again, right? So just from this moves, 7 days, okay? 7 days, 2,000 to 20,000, right? And this is by simply using structure analysis and multiple time frame analysis, okay? Another one is the Euro yen trade, okay? From 130, this one is in January, from January 15th to January 30th, okay? Grow from 5,000 to 15,000, okay? And then I withdraw the money. Okay, you can see here, there's a withdrawal of 15,000, okay? This is all real thing, okay? I'm really, I don't, just giving you ideas that, we can do what, we can short or we can buy. I really trade, okay? So this is a very, very real example, shows that how do I apply my strategy in the real world, right? And I can say, yeah, the profit is awesome, right? What else business can bring you from 2,000 US dollar to 20,000 US dollar within 7 days? No way, right? In real world, right? Unless you are selling drugs, right? But I don't see that this is a 10 times of the 1,000% of the yield, right? Is applicable in other business, but in trading you can do that. Okay. All right. So yeah, that's all for today. Thank you guys, and I'm going to upload the video later. So see you soon. Talk to you soon. Trade your plan and plan your trade. Bye bye. Welcome. Yep.